Hey Old Sport, this is JC with FX Insights at CIS Trading. In focus, the US 500, that's the S&P 500 futures contract at currency.com. You can see it there up on the screen. I was just going to allow the CIS CCT GG Market Vision with the Capital Performance Indicator, which is an indicator on the bond, to kind of run for a few minutes. We could take a look at it, see what this market's doing relative to this indicator suite. Currently on this 1 minute, we're down near sort of a baseline. We've just played out a 3-bar reversal short, and it's trying to turn up. So we can just watch this and watch how this CIS GG Market Vision works. Very important, on the right-hand side of the screen, you can see where you have minimum market, maximum market, minimum target, maximum target, minimum pro and maximum pro levels, which move and oscillate around the core relative to the price. And you can see what effect the movement of price has on the market potential, whether the minimum is higher or the maximum is lower, and kind of see where those breakout levels are in advance as the price is moving real time. In the white tab is the TradingView Toolkit auto execution algorithm, which runs a 92.8% profit ratio to a 7.2% loss ratio in the market. So on a foreign exchange bond, for example, $100,000, you would make roughly about, on most currency pairs, between $20,000 and $25,000. Some low-range pairs may be down to $15,000 to $17,000, and out of that capital gain of about $20,000 to $25,000 per week per bond, running around the clock every minute, you would only lose anywhere between about $1,500 and $2,500 out of that money on the net losses. So it's a world-leading, best-in-world auto execution algorithm from CIS Trading. The Capital Performance Indicator at the bottom is a bond relative indicator. It is taking into account the entire bond. I might adjust that out and show you all the bond valuations that are in there. The indicator that you're looking at currently isn't the entire indicator, so I'll show you very quickly how it works. I can go through and I can add the entire bond construct for the capital structure into the indicator, and then I'll disable it again so that you can see the actual histogram performance. So when we're looking at this bond indicator, the valuations that you're looking at are relative to the actual 10-year bond and the US dollar as far as capital gain, capital loss. So you can see what the real cost is. Now the real cost is the total percentage expected to have to be drawn out of the economy at the US Department of Treasury in regard to the money. So the real cost of the bond includes all the cost on the bond for every single dollar that's borrowed, for example, for margin trading or for a foreign exchange bond. For every single dollar that's been borrowed in the economy within the capital markets, that real cost is the cost of that money that has to be paid back to the Treasury. And what they're going to be taking, according to this, is about 12.6%. So right now we're running, that'd be about $12.5 trillion in the month of March at the close of the current 10-year bond. That includes both the yield and the cost of the money. And then as you go down, you see the real bond. The real bond is what the total bond is now. Okay, now that includes a historical increment and balance of money within the market. Then you have the yield. The yield is the net market yield. The yield spread is the difference between the yield and the cost, which is the CIS CCT cost. Where you see that? That's the actual cost on the bond. And you can see that there's a yield spread there of 1.2%. The US dollar value includes the net US dollar change. So when we're looking at the top of the screen, you see DXY. That shows the net US dollar for the day, so roughly unchanged. There's a small little increment of change in there, and it won't show unless it's effective. And as soon as it has an effect on the net output of the indicator system, that will fluctuate some. You'll see it move from blue to green, and that means the potential effect of the dollar is to go negative currently, and then it'll switch to orange, that's flat, and green, that means that there's some bullish pressure in that money. So this is the US 500. We have a current setup on the 1 minute, looks like a small little 3-bar reversal. There's not much range in it. The volume is significantly low compared to historical levels. It's about 1/10 the normal exchange volume on the 1 minute chart, based on the history of the S&P 500. The pro trading levels, the CIS CCT, the GG series, and the net CIS trading levels are algorithmic levels for the actual underlying relative to that overall yield curve. So I'm going to take the yield curve metrics off, which includes the yield spread, the yield, the real cost, the real bond, and I'm going to take off the base cost of the current bond, and I'm going to take off the bond premium. And then when I take all of that off, you can see an indicator that looks similar to what most might refer to as a MACD, or a moving average, divergence, convergence type of indicator, okay? But that isn't really what it is. What it's actually measuring is the effect of the actually underlying price performance relative to the capital structure of money, whether or not the money has potential to make money or lose money. Similar to Prometrics, we're looking mainly on this indicator for 3-bar reversals. So when we're looking at the current 1 minute chart there, I'm going to zoom this out a little bit so you can see more of the chart. So what we're looking for, you see the 3 previous bars on the bottom indicator, capital performance. We're looking for that to make a 3-bar. You see how the toolkit shows a 3-bar reversal? You'll always typically get that one first. We're trading above the core with a minimum market target of 39.51, and the maximum market target is down below that at 39.45. And that typically is indicating what is called market inversion. So the market might see pressure as it moves higher to come back down to that maximum market level over time until we get a time change on our candle interval. So we did get a 3-bar reversal there, and this 4th candle you can see kind of made a move higher, and then when it got to that inversion where this minimum market is at the top, so think about minimum markets above, maximum markets below that core, that market inversion will either push the price really high really fast, or if it gets up to that algorithm level like it did, you'll see that pressure come off. And you can kind of see with the cloud in behind the market vision indicator, the blue and green cloud that's in behind it, you can see as it kind of approaches those zones and areas. You see how we pushed up into that dark blue zone in the previous candle. Now we're showing the 3-bar algorithm short, but we don't have that on our capital performance indicator lower. So I'm just going to let this run here for a few minutes and point out anything that I see that might be significant as far as the indicator being used actively. And it's my predominant tool that I like to evaluate markets and trade with. So we'll just kind of watch this here. Again, I'm JC with CIS Trading, and this is FX Insights. We're looking at the S&P 500 in focus. If you look at what we just watched there a little bit in the price action movement, now we have a little bit of a top tail on this kind of small little hammer doji. As the price moved up, you saw that the indicator would flash green on the market vision, but the candle itself still showed the blue arrow with a blue candle. It showed a green outline showing that the price had moved higher, but the candle itself did not turn green, and you still had that sell arrow on it. And then as the price moved back down, you saw that market vision switch back over to blue. Typically, what you're looking for most often are continuations when you get those signals. So on this current candle, we're looking at a short on a 3-bar short on the Capital Performance. And you can see how the price conditions on price action in the marketplace sort of look bullish and flash bullish, and you have that tiny little arrow there showing that that's bullish. When you compare that to the market vision, you see how as it gets up and ties up in these levels, as it goes up and strikes this level, it's a very low range market. So when it goes up and hits those levels on this 1 minute, it starts to reverse again. So you have a blue candle. See how that algorithm for TradingView Toolkit just showed a 3-bar reversal short as that price ticked down just a little bit. So typically when you're looking at the market vision, when the indicator cloud that's in the background, when you see that compression, that price, as it compresses, will typically be a narrower price range. Occasionally you'll get a push up into those levels, but where those prices compress, the range is going to start to get smaller and smaller. When you see expansions in that price, is typically where you see that expansion in that market vision. See how as it moved up into those levels in that compression area with that bullish move I was just talking about, when it moved up in there, it right away kind of sold down from it. There's something in the capital structure that's actually causing that to happen in the price performance. And you can see that in the Capital Performance. We had a bearish condition, and that candle came down and hit the low levels there and then bounced right up and kind of tied together and created that compression, and then now we're back bearish again. This is a market that's really struggling to sort of accept the fact that we might have reached a point of economic insufficiency. We've borrowed an extraordinary amount of money to pay for wages over the last few years, and this is a market that's had a lot of capital invested in it and that has gone up significantly from 15 years ago, even from the prior 2007, 2008 down markets into the 3-year recession. In that recovery process, we've gained an extraordinary amount of capital investment in the economy. The only problem is that investment came predominantly from debt-driven structures, including 70% of equity, operating equity in the S&P 500 is financed on secure interest-bearing debt to financial institutions, not necessarily through stock or the market itself, but 70% of the S&P 500 is financed through a lending vehicle aside from their stock shares. And that can put a lot of pressure on an economy that begins to have some capital structure problems relative to overall debt concerning the value of the U.S. dollar, the amount of the bond. You know, like I reviewed earlier, this bond isn't as significant as some of the past bonds over the last 4 years, which have ranged all the way up to 9 to 11%. But what the effect of inflation over time in the economy and on the money, you can see that the indicator still knows that that bond shows about 12.6% is what's going to be required to pay bills at the Treasury Department relative to the capital structure on the cost of money in the economy. So one thing we can look at earlier, if you go back 5 bars, I talked about that potentially looking like it was going to turn down. We had a 3-bar reversal, and the price just went down to those lower levels and then tied those up with that one bullish candle. You know, if you're in that position and it draws that way very quickly, all of a sudden on a 1-minute chart, Market Vision allows you to see what it's actually doing there as it hits those levels and comes off. And you can see now we're trading significantly lower. If you go back through, you go back 4 bars on the lower indicator, you see another 3 bars short. And now we're reaching a level where we've got a little bit of a stop edge where that Market Vision indicator starts to compress and pull in together from its extremes again. And you're showing a bullish reversal now on the capital performance indicator. You know, the maximum from where we are at 39.44 is probably about 2 points to 3 points up to those higher levels on that Market Vision indicator. There's also a video on my YouTube page, you can look it up, that goes over how to pro trade this Market Vision indicator. If you watch the pro trading video, that's hashtag pro trading on my YouTube page at youtube.com/user/CIS trading, or you can search hashtag pro trading, hashtag CIS trading on YouTube. When you watch that video, I show you how you can pro trade your chart with CIS CCT GG Market Vision and how that chart pro trades with this tool. And then you can actually take the cloud part. If you want to take all those levels off, you can deactivate that indicator very simply on the TradingView platform, but then it would plot all of your pro trading levels based on the CIS CCT GG Market Vision indicator. These 1-minute charts tend to step a little bit. What we're looking at here is a diamond, a small little 1-minute diamond, which signals a reversal higher. And I'm still showing I've got a 3-bar up, 3 bars back, and usually within 3 bars that should take place. And every time this moves up just a little bit from here, not much, we get another 3-bar in behind it. But currently we're looking at a diamond pattern where you have an inside bar, outside bar, inside bar there at the bottom of this 1 minute. I do not really expect this market to really go up whatsoever. I have an initial 3,200 target on a short in my demo fund, and I expect significant lows long term in the market. And now we're back to 3 bars short here. So, on your risk there is about a point. If you were to have made that trade long on the last signal, and then when that happens, you would lose about a point, but it should give that right back at least a point and a half. You should get about 150% of whatever that is if it's managed properly. That's sort of the way the algorithm works. I can cycle through some other time frames for interested persons. So I'll go through the 5 minute. You can see the 5 minutes bearish. You could easily see that on that 1 minute chart. You start to see some choppy kind of trading on a 1 minute. Go to a 5 minute. You can see clearly for the last 20, 30 minutes, this has been bearish. You see the turn down. That wasn't quite a 3-bar on the turn down, but it's still, bearish conditions. You show the price moving down on the CIS trading on Capital Performance. You don't have any 3-bar signal there yet. Significant steepening on the toolkit. "15 minutes been bearish for quite some time, about 3 hours, 4 hours. I'm not sure what this level is. Let me check it real quick. 39.30, this 15 minute has that targeted on the algorithm. Let's see if we have anything that coincides with that. I have even lower than that. Somewhere between 39.08 to 39.31 on the 1 hour. So when you look back from the 1 hour, 15 minute, 5 minute, you go back to the 1 minute, see how we had sort of some choppy up and down, very low range moves. Anytime you get that on a shorter time frame, if you just extend your time frame out 5 minutes, 15 minutes, it'll give you some confirmation as to directionality. That's an all for one short there on the 4 hour. One insight into the capital structures, looking at just the construct of the U.S. debt liabilities, just on debt, and adding in what's expected to be the Federal Reserve and Treasury's responsibilities with the yield curve in the collection of the yield and the payment of the cost on the bond in March. When you add those two together, it looks at about 44 to about $46 trillion net. And when you look at the overall economy, that's about, let's say, 1/3 of the whole capital value of the economy on the Federal Reserve's total balance sheet. When I look at that money, I would take that 1/3, multiply it by 2, so say 30%, multiply it by 2. To me, that shows that these markets are going to see a 60% drop. I've posted previously before that this next time, after the 2018 December 1 post on the December market crash on the 1st of December that was coming with the Canadian dollar going up, and the 2019 March and 2020 March, because over the last couple of years, 2021, 2022, I've been very clear publicly online regarding the fact that I do see significant declines in markets and expect a day, at least one day, on the Dow Jones Industrial Average coming in the next down cycle or drop, that the Dow Jones Industrial Average will drop probably 5,000 points one day in the future. That's not saying necessarily from these top high levels, but I do feel like that as the market starts to decline, we're going to reach one place where money really lets go in a measure to conserve capital. So that's something to just watch and keep in mind. I do think there's a lot of risk overall due to the costs in the economy and inflation, it's very, very hard to be supportive on the investment side in the economy as a whole. That doesn't mean there's not great opportunities, because I think there are. I just don't think as a whole that there really are. This is the daily chart. You can see what we're looking at there. When you see this type of construct, you see where the TradingView algorithm's up here at 39.80. That creates some slowing pressure off the top. That algorithm really needs to be below for the price to lead down. When this happens with this TradingView toolkit, what's actually happening is it's reversing the conditions of that algorithm. And when it does, there's some slowing pressure that's created by that algorithm not leading. It should be leading. It should always be, when the price goes up, if you look back 5 or 6 days, as the price moved up, you see how the algorithm is leading, because that's the momentum potential. So what we're looking at here is sort of a reversal of the market momentum, shifting down. We would have to close significantly above the core at 39.70 relative to the day's range for that momentum to actually reverse short. So it's kind of a critical day. You think about midweek, Wednesday, we could have a Wednesday, Thursday down, and maybe some slowing pressure moving into the weekend with hopes that, somebody might intervene to take action. But realistically, there's not much they can do to intervene to take action aside from increasing capital stresses by accruing debt. So, when you look at this market, just keep that in mind. Overall, not investable, but there's going to be some opportunities in the market where there are some great investments to make, but it's not going to be anything that's valued high or anybody that's holding a lot of money because the money's going to have to come from somewhere when it comes time to pay the bills. And if they keep passing bills in Washington, D.C. to pay, somebody has to pay them. And unfortunately, the government doesn't really have money. They have to borrow that money, and they borrow it from our earnings in the future. And if those earnings in the future start to look meek at any time, then I think that's where you're going to see money really shift in the economy. If we have a couple of major Dow components that report any significant slight in their economic performances, I think then all of a sudden we're going to see money shift to protection mode and into an attitude of trying to assess what the overall cost is going to be from that point. But I really feel like it's at least 60% down. So when I look at these markets, if they're trading anywhere above 1,700 on the S&P 500. On the Dow Jones, I have a 10,200 target, 10,700 target, somewhere in there. But for these markets to be trading, much above 1,700 is highly unlikely to me. I think we at least go down to that 1,250 to 1,750 level in this S&P. May not be tomorrow or next week or next month, but it's coming. So at some point, the economy has to assess its net cost and then sort of rework from a basis of where it's at. $46 trillion is an extraordinary amount of deficit. There's not even that much money invested in the S&P 500. So we'll take a look back at the 1 minute. You see a 3-bar reversal back a little ways. I was talking about that daily, gave some signs of showing a little pressure. We can look at this 4-hour. Still significantly bearish. Got a 3-bar reversal short on the all for one short, which does show a continuation lower. That target at 39.30. 15 minutes still being led fairly steadily, and it's not steep. So that could continue in kind of a steady fashion until we see one steep move that moves down toward these algorithm levels, which are now on the 15-minute below 39.30 at around 39.19. So again, that 39.02 to 39.30 range, based on, I think it was the hourly chart, yeah, that 3,900 to 3,930, we're still looking to approach those levels, I believe. Let's go back to the 1 minute. You can see the compression in the market vision where you don't really get any on the bullish bands, the green bands that you see, you don't really get a real bullish move. Those prices move right up into those levels and then they turn right back down. So that gives you an indication when you're looking at it, right here, this would be a great opportunity to short. Up here around this 39.40 again on this 1 minute where this price hasn't moved much. And give it a chance from those levels. It's not a bad place to maybe look at short as it moves up into that on compression. When you use the pro trading levels and the market vision to kind of determine that place to sell kind of at the very top to take a chance, you're never going to have algorithmic conditions that tell you that that's bearish. There are algorithmic conditions when you look at the minimum market is at 39.40 on my indicator, and the maximum market is way, dipped way down here until the new candle formed. It was down around 39.37 a minute ago, and then on the new candle you see those conditions reverse. So, from this 39.40, probably heading down around 39.37 initially on this 1 minute. Zoom this in. You can see we've made a significant dip on this 1 minute, and there's something in this market that's happening in the actual capital structures. The pound yen's one thing you can watch, and that's sort of holding it up. But when you look at these, longer time frames, you're getting a little bit of an ease on the 5 minute, but look at how low these algorithm levels are. I don't even expect that to hold with any significance if it moves up some. Same thing on this 15 minute, non-responsive on any opportunity for an up move. That's a significant sign that there's not interest and there's no real capital leverage in the market to move it higher. You look at the dollar, perhaps some devaluation in the dollar to cause inflation, but that's not really good for this market. If the dollar goes down to pay bills, then the market needs to go down with it. I don't see why this dollar going down should cause prices to go any higher. We've seen 30% inflation on most prices in the economy, base prices. I mean, Dollar Tree is almost $1.50 tree now. So. And you look at that 4 hour, I got 39.31 on the algorithm, so that gets us down to that level. Look at a weekly. I don't think we're going to see too much on the weekly because we had a bullish week last week. That probably didn't make sense to a lot of people. We don't have a 3-bar reversal on capital performance there. The only thing that we kind of have is a drift up into this into the compression on market vision, and then we have a bullish expansion on it, but then today there was no response on that. That doesn't mean that in the last 2 hours that somebody could possibly do something so that we see those prices move up into those higher ranges, but I don't expect it. But it's still possible. That 1 minute shows it a little bit, but not much else, really. The monthly is an outside bar short on price action. The algorithm shows that bullish expanding out of compression, but that's a diamond compression where it's green on top, green on bottom after a down move.
Your registers today?
You can see right there on my monthly, I have charted their 16-month period of inflation in the market, and we're down below the highs of that inflation where that orange arrow comes down, and the S&P value target of about 3,200. I still maintain that even if markets went all the way back up to 5,000 levels, it's not worth investing in the whole economy. There's going to be some extraordinary failures when it comes to time to pay for what's been done over the last 15 years. It's a lot of capital, but $46 trillion is more money than was ever invested in the U.S. stock market.
I noticed on your sign out there.
All right, take one last look at the 1 minute.
Say what's 2%.
See what we see there. Got a little bit of a gap pop up into that algorithm level. Don't really like that. So what I would do from this point, 39.40, I said was a good short. I still maintain that. Nothing I see here that would derail that. I don't see this 5 minute. This algorithm's still below this bullish move up into compression on market vision. Go back to that 1 minute. So hopefully that gives you a good idea here at FX Insights as to what the CIS CCTGG Market Vision, the TradingView Toolkit, which is the auto execution algorithm for the CISGG Pro metrics, which are a part of the toolkit that comes with the Pro Trading Seminar. And the capital performance kind of show you as you're managing positions in a market. It'd be worth leveraging here at 39.42 and adding a second position and averaging back to 39.41 when you look at that blue tick on that blue arrow short.
It's on your sign. It just says 2 for 6. You don't know?
Something in the capital structures and in that market vision, you see where the max market and the minimum market kind of oscillate back and forth. I really think that that's going to turn back down a little bit. I don't like when the market does this. It can easily throw up high, but it's not going to I don't think withstand anything. They're not going to be able to do that without devaluing the dollar, and then everybody's going to know what it is. It's just an inflationary move. So once again, I'm JC at CIS Trading. This is FX Insights, and just a look at some of the resources created and developed here by myself at CIS Trading and how they can be used in the market. And I hope you guys have a great week, great weekend. Look forward to the playoffs in the NFL this weekend. Have a good one on sport.